What is going on, everybody? Welcome to the Wise Guy Radio Show, episode number 43. This is Jay Muckley, your host, and I am excited to be here with you guys today. As always, thank you so much for tuning in. This show is dedicated to educating, entertaining, and inspiring all you fake, crazy glass artists out there and glass enthusiasts and smoke shops in the world. And again, thank you for tuning in. Today's going to be a quick little short snippet episode. It's the end of the month, and I wanted to go over kind of my concepts and thoughts about doing a monthly P&L statement, which is your profit and loss. Because I'm doing mine today, I figured I would share what I'm doing with mine and pass it on to you. And whether you do them or not, it's a good idea to do them at least monthly, if not weekly, to keep your numbers in check. Lots of reasons behind it, but I figured today would be a good day to get into that concept, even though bookkeeping and numbers and that kind of stuff can be a little tedious and boring. But it's a crucial, important part of our businesses if we want to continue to thrive and be successful. So, that being said, hope you guys are all having a great week. This show's coming out a little later than normal. I had some cavity work done this week, and because of that, my mouth has been unavailable to speak, if that makes any sense. So, yeah. So, also, if you have any teeth ache, go get your teeth checked out, because our teeth are important. So, a little side note there. So, yeah, thank you so much for tuning in, and here we go with this chit-chat about the business talk. So, it's the end of the month, and all you crazy kids out there have spent money on materials and gases and office supplies, and you've also brought money in, hopefully, to replace that money you've spent. And the idea is to keep a balance of what it is that's going in and out of your shop. That way you can kind of keep a budget. You can forecast, in a sense as well, what's coming up. Especially next year, when you look at this year's numbers, you can forecast and help yourself to kind of prepare and plan for what's coming up. And also have the availability to see if you're going to have a slow month, and then if you know you're having a slow month coming up, you can put a little bit of money away if you can to help you get through that slow period. But so that's some of the benefits for doing this, and there's many more besides just that. I mean, it makes your life just so much easier in the long run if you just keep track of this shit if not daily or weekly, at least monthly. And the monthly process is just doing it one time. So what I basically do is I have a really simple office data log notebook that I got from Office Depot or Staples or one of those office supply stores. And it has like categories and incomes and merchandise expenses and whatever. But what I've ended up doing is taking the information from that and just taking a plain yellow pad and created 3 columns for myself. And the 3 columns I use, the columns are just basically columns I use for putting numbers in. The first one I write down is all my income, and the second one is my expenses, and then the third one is my totals. And for the income part, that's everything that you've brought in, obviously revenue-wise for your sales. And then you have your expenses, and your expenses need to be divided into 2 different categories, basically. One expense is cost of manufacturing, cost of goods, and the other one is going to be your office supplies and miscellaneous expenses. So in the expenses category, what I'll do is I'll just write down the numbers, and as I write the numbers down, say I have an order for clear glass that I purchased, I'll just put an M next to that number. And then if I have, say, printer paper I had to buy, or shipping supplies, or have even just shipping in general, I'll put a O next to it for office. And then at the very bottom of those columns, you add up your totals. And then you can do an overall total for your overall expenses, but then it's important to categorize them, because at the end of the year in taxes, my accountant, she separates them, and you're allotted a certain amount of a certain percentage in tax breaks wise, depending on your expenses and your costs for merchandise and stuff. It's kind of a weird situation, but definitely keep them separate. But you still want to keep them together as an added up number, so you can just see where all your money went. So on the left side in the income part, I will not necessarily say one day I have like 4 sales. I won't put those sales down individually. I'll add them all up into one total in a day. It just makes it a little bit easier to do. So write down all your expenses, all your income. Write that down. Add it up. So say you have like $3,000 at the number at the bottom, just for a generic number. And then you write down all your expenses, and then you have, say, $2,500 in expenses. So your total on that is going to be obviously $500. Now that $500 is your profit or your net of your month, and that is what you base your taxes on. A lot of people recommend anywhere from 15 to 25% that you pull out to go towards taxes. Whether you owe that number or not, it's just a good rule of thumb to pull that out. That way you're prepared for your tax bill when you if you are doing quarterly estimates. I'm still going to preach that quarterly estimates are beneficial because it allows you to pay a quarterly estimate, which is basically, instead of paying a big chunk at the end of the year, you're just paying it every quarter, and it helps to alleviate the amount of stress and also the large number you may have to end up paying at the end of the year. And if you overpay, which is why it's called an estimate, then you get a refund. Just something to think about. So just a real quick thing again, just make 3 columns on a sheet of paper: income, expenses, and totals. And just separate your expenses. Separate your expenses between office supplies and your merchandise, your cost of goods to manufacture. Also think about too your cell phone bill. Write that number down on there. That's office supply number. I'm just going to go over a couple different things too. Thinking about stuff. Pardon my sniffles. It's kind of gross, I'm sure, in your ears. But anyways, think about like when you get gas and you have to go on a trip to sell an order. Write down the mileage every single time you guys go on the road and you need to make a delivery and also return home. That's depreciation on your vehicle and also mileage. And there's different ways of using your mileage for deduction. There's a percentage you can get, or there's also a ratio that they use or a formula they use for calculating how much you get, like basically a refund in the gas that you spent. But if you keep track of that stuff, keep a little ledger in your glove box, or use your phone, and just every time you go to make a delivery, write down the number that your gas mileage says, or your your odometer says, and then when you return, write down the number that your odometer says. Keep track of all that stuff, so that way when you do your monthly report, you can write down at the bottom of your sheet your mileage on there, and then just keep track of it. And again, that shit all adds up. You'd be amazed. And then it is the little tax break you get on there, which is always nice. Tax breaks are beneficial. Also, think about, in terms of tax breaks, equipment that you purchase, all your tools, anything like that. Anything that you basically purchase that helps you create whatever it is you're creating. Think about also all the stuff that you purchase for your office. If you buy like shoes and shirt and shorts or whatever, clothing-wise for work, and you use it just for work, which is sometimes hard to differentiate. But if the IRS doesn't always check up and say, hey, are those shoes you're wearing, are those just your work shoes, or are you wearing those when you go golfing, or when you go hang out with your friends, or when you're sitting around the house, or whatever, But it is important just to think about those kind of things, like, clothes that you wear at work. That's a potentially tax write-offs. I'm not an accountant, so I don't know exactly everything. I definitely recommend that you do refer all this to an accountant. You can also go online and Google. There's lots of references on there for small businesses and tax deductions and stuff. You can just Google small business tax deductions, and you'll get a whole list and different websites and things that you can come up. But I just figured I'd put this in your earballs today, just to think about it, because it is the end of the month. So, and it's also important to be on the ball and stay in touch. So, so get organized, keep a file, keep track of your numbers, expenses, your costs, your profits, and your taxes. And then keep ledgers of your mileage, your depreciation on your vehicle, and all that jazz. Again, like your cell phone bill, potential clothes. There's percentages you can write off for meals and stuff. If you're going out with a client and you're talking about, an order or whatever, you can write all that stuff off. So, and again, get an accountant and refer to the accountant, because they will be a lot more detailed with what it is that you're able to write off in terms of numbers and percentages and what have you. So, and also get in the habit of filing your Schedule Cs for all those out there that are sole proprietors or LLCs or corporations or however you got yourself registered. So, all right, y'all. That's my half waking up there spew about doing your monthly report. So hope this helps. Again, it's a quick little snippet here for you guys. I just want to get this out and to you all. So there you go. Have a happy Wednesday. Those that went to Big this past couple days, I hope you guys had a successful trip and sales down there in Miami. Or those that went to Age this week up in the Northeast, they all had good luck with that. And other than that, hope you all have a beautiful day, and we will talk to you soon. Y'all take it easy. See ya.